Well, hello and welcome to Business 360. I'm Ashmit Kumar, and here are the headlines we're tracking this evening. Stock markets stumble for the first time in 2023. Sensex loses over 600 points. Nifty declines by 1%. Metals and reality stocks lead the fall.
Many challenges right now around the world. In fact, India is probably the exception.
India is the exception in a challenging global environment, says Satya Nadella, even as he remains cautious in the short term, expects pockets of growth to emerge even if economies go through a recession, and remains bullish on the long term. That's an exclusive. Nadella expects the next 2 years to be challenging for tech companies after the pandemic-fueled growth, admits that Microsoft is not immune, and that says that tech sector must look inwards to boost efficiency to remain competitive. The Union Cabinet approves an initial outlay of close to 20,000 crore rupees in its green hydrogen mission, targets investments worth 8 lakh crore rupees and hydrogen production capacity of 5 million metric tons by 2030. The mission aims to give incentives worth 17,000 crore rupees for electrolyzer and green hydrogen manufacturing. Setback for Google. The company appellate tribunal refuses to say the 1,337 crore rupee penalty imposed by CCI on the tech giant. Says economics can't be allowed to run astray, orders the company to pay 10% of the amount. Google hints at moving the Supreme Court to challenge the NCLAT order. 30 employee unions belonging to 3 Maharashtra government-owned power discoms begin a 72-hour strike, protest against parallel licenses to private players. There are reports of power supply disruptions in 9 districts, including Nagpur, rural Pune and Wardha. Sam Bankman-Fried, the founder of bankrupt cryptocurrency exchange FTX, pleads not guilty to fraud charges. 2 of his colleagues have already pleaded guilty and are cooperating with investigators. Higher household expenditures, lesser spend on health and more savings. That's the sentiments among consumers as we enter 2023, according to the Axis My India's Consumer Sentiment Index for January. Well, let's begin with the day's market action. Now, the Lal Street saw an all-round fall today and failed to hold on to this week's early gains. Nifty and Sensex fell over 1% each, with metals and realty leading that slide. Both indices saw a fall of about 2%. Banks and mid-caps also fell in line with the benchmarks. However, pharma counters showed some resilience. Nigel D'Souza is joining us now with a quick wrap of the day's market action. Nigel.
Well, global markets itself were jittery overnight on the back of recession fears, and that's what weighed on global stock markets. For the Indian markets, participation was back, which wasn't the best thing because we did see quite a bit of selling pressure all through the trading session. The bigger problem was that the broader markets that outperformed for the last 2 sessions, well, it underperformed in today's trading session with way more number of stocks declining in comparison to the number of stocks that were advancing. Metal stocks, well, they've given away most of those gains that we saw. Remember, pricing did see a bit of a bounce in the last few sessions. However, the recessionary fears are back, and the problem is, will China slow down yet again? And that's why ferrous and non-ferrous stocks, they did come in for selling. Coal India, there was an additional news print that did come out, and that was that the wage hike has been approved to the tune of around 19%. The street believes that in the near term, things could be under some pressure because the pass-through may not be possible in a pre-election year. Tech stocks, well, they did see some pressure all through the trading session, and they're not out of the woods as yet. Infosys and Wipro, both of them did end in the red. The problem, though, is that the heavyweight stocks, Reliance Industries and the HDFC twins, well, they ended with cuts of more than 1%, and that's what put pressure and contributed to a bulk of the 200-point downtick that we saw on the Nifty itself. The Nifty Bank, that's been the saving grace. The problem is today, it broke the 20 DMA and ended below those levels. So you had IndusInd Bank that was lower, RBL Bank, as well as Canara Bank. All of them did end with cuts of around 1% to around 3% odd. Remember, they've had a big run, but they did come in for some selling today. And IndusInd Bank, they came out with the quarterly numbers, which didn't look that bad, but that stock did see a bit of a knock in today's session. Well, a couple of other quarterly updates as well did come about. Vedanta and Avenue Supermarts, but both those 2 stocks as well did end with cuts. All in all, it was a down day for the markets. The Nifty ended at the low point of the day Interesting to see whether or not we go and test the December 2022 lows, or in fact, we do see a bit of a bounce from these levels.
Right, Nigel, thanks a lot for that quick wrap. Now, on the macro front, meanwhile, India's services sector activity saw a sharp pickup in December, with the S&P Purchasing Managers Index rising to 58.5 versus 56.4 in November. The number has remained above the 50 mark for 17 months in a row. With this, the composite PMI, which is a combination of manufacturing and services, has risen to nearly 59.4 versus 56 in November. Well, a steady fall in iPhone maker Apple's stock prices saw the company's market value drop below $2 trillion, making it the latest casualty in the tech stock rout. Apple fell nearly 4% yesterday to close at its lowest level since June of 2021. Not a single company now has a market value of over $2 trillion. In fact, Apple and Amazon have each lost over $800 billion in market cap in 2022. In fact, the market value that each of these companies have lost was more than double the Meta's entire market cap. Well, as tech stocks continue to tumble, Microsoft's Satya Nadella says that the next 2 years will be challenging after the pandemic-fueled growth. Speaking exclusively to CNBC-TV18 Shireen Bhan, Nadella said that he remains cautious in the short term but bullish in the long term. The Microsoft CEO expects pockets of growth to emerge even if economies go through a recession. Nadella called India an exception amidst a challenging global environment.
Inflation, recession fears across most parts of the world at this point in time. Interest rates continue to move higher. Is it all flashing red on your dashboard? Is there any sign of green at all?
I mean, it's clearly many challenges right now around the world. In fact, India is probably the exception. There are parts, India, Middle East, Latin America, some of the other parts of Asia are the things that are green. And I think Europe and the United States are going to be challenged. I mean, the United States, not yet, but I think 23 will be much harder. So yes, we want to be very cautious in our outlook in the immediate term. Long term, I'm very bullish of us coming out, right? Because there are two cycles, I think, Shireen, that are happening. One is a supply cycle that's a very long cycle. That's a secular shift. We're not going back to 2010, 2011, because of the geopolitics as well as essentially the rejiggering of supply chains. I think we're going to have a supply cycle that's going to persist. The demand cycle is going to be a classic demand cycle. There will be some economies that will go through a recession. Some may be deep, some may be minor. And then inside of that, there will be pockets of growth like India. And so I think for us as a global company, we're not going to be immune from what's happening in the macro. We will have to also get our own sort of operational focus on making sure our expenses are in line with our revenue growth, manage the short term, but make sure we're investing for the long term.
Many CEOs are now talking about having to respond to the new economic reality. What is that going to mean, not just for Microsoft, but for the tech sector in general? Are we likely to see more pain, especially when it comes to retrenching, downsizing, margins going to be under pressure, guidance going to be a downside risk to that as well?
I think overall, quite frankly, whether it's for us as Microsoft or the tech sector, it's going to be very important to look inside and say, are we as efficient as we need to be competitive? I mean, at the end of the day, just because we are a technology company doesn't mean that we are the most efficient at what we do. And so as the paradigm has changed, as the bar has risen, we have to measure ourselves with the new bar. So definitely and also the growth picture has changed, we have to have operating expenses that need to be aligned. So definitely we are going to look at all of that, and it means that we're not sort of immune, as I said, to the global changes. But the one interesting thing to your point, though, is tech industry employment is not tech employment.
Yeah.
That, I think, is the key divergence that needs to be well understood, because that, I think, is positive, by the way, for the tech industry long term. Because if you look at it, overall tech jobs is actually increased. The tech jobs now are coming in financial services, in energy companies, in retail, manufacturing, and that's healthy because in the long run, all those employees in all those industries are going to consume more tech infrastructure, right? When we think about our cloud business, long term we're bullish because of the fact that there's more employment outside of the tech industry. of technical talent. And so that's, I think, what we are banking on.
No, I think you underscore the labor market resilience aspect. But, what we've seen, especially as far as the stock markets are concerned, and I know that CEOs often say that don't focus on what the markets are telling you, but they seem to be suggesting that there is significant pain in store for the tech sector. How do you read what's happening with the way that the markets have corrected, specifically the tech stocks, and what that signals?
For me, look, I'm never the one who would ever say ignore the market, because the markets are smarter than us all. I think they are reflecting on is, look, where is the growth coming from? And how should we think about normalizing for that growth? And so I think stock performance, economic performance are not exactly the same. But the key for us as a tech industry, I always go back as a percentage of GDP. The simple question to ask is, do we think tech spend will increase or decrease? If we believe software and digital infrastructure is going to be important in construction, in energy, in manufacturing, long term, then you have to be long on tech industry. But will we have to go through our own cycles around productivity? Absolutely, like anybody else. But that's at least my perspective. I wouldn't look, the only reason why I would say ignore the short term is because in the long run, we would be fine for demand. But in the short run, what we have to focus on is our own productivity and making sure we are at the efficient
How would you quantify short term and long run?
I would say the next 2 years are probably going to be the most challenging because after all, we did have a lot of acceleration during the pandemic, and there is some amount of normalization of that demand. And on top of it, there is a real recession in large parts of the world. And so the combination of pull forward and recession means we will have to adjust. And that will cycle through the demand cycle and, in fact, come out of it with what can be another massive growth cycle for the tech industry.
Well, you can catch that entire conversation with Microsoft CEO Satya Nadella tomorrow, right here on CNBC-TV18. Well, meanwhile, the Union Cabinet today approved the government's national green hydrogen mission with an initial outlay of 19,700 crore rupees. The mission aims to make India a global hub for production, utilization and export of green hydrogen and its derivatives. Parishat Luthra is joining us now with more on the mission and its goals and expected outcomes. Parishat.
Out of the total outlay of 19,744 crores, approximately 17,000 crores will go towards incentives for green hydrogen generation in the country and electrolyzer manufacturing. There will be schemes which will be launched by the government on the lines of PLI to roll out these incentives. There will be stakeholder consultations over the next few months before operationalizing these schemes, but approximately incentives to the tune of 4,500 crores will be rolled out for electrolyzer manufacturing and 13,000 crore for green hydrogen generation in the country. The government plans to achieve 5 MMT of green hydrogen production capacity till 2030 and 60 to 100 gigawatt of electrolyzer capacity as well. There will also be investments made by the government through this mission plan into R&D, into infrastructure and transport development to boost the green hydrogen sector in the country.
इस मिशन के क्रियान्वयन से भारत को ग्रीन हाइड्रोजन के उत्पादन, उपयोग और निर्यात के लिए एक ग्लोबल हब के रूप में स्थापित किया जाए, इस दृष्टि से काम किया जा रहा है। अब 2020 तक ग्रीन हाइड्रोजन की कुल डिमांड ग्लोबल की जो होगी, हमारा प्रयास है कि हम उसका कम से कम 10% भारत के लिए लाएं।
Well, a quick look at the other headlines. It's a setback for Google. The company appellate tribunal refused to stay the 1,337 crore rupee penalty imposed by CCI on the tech giant. The tribunal, while observing that economics can't be allowed to run astray, ordered the company to pay a 10% of that penalty amount. Google, meanwhile, has hinted at moving the Supreme Court to challenge the NCLAT order. National Asset Reconstruction Company has emerged as the highest bidder for the Shrey twins ahead of autumn. Sources tell us that NARCL has offered over 5,500 crore rupees in terms of net present value. This includes an upfront cash payment of around 3,180 crore rupees. Delhi Metro Rail Corp tells the Delhi High Court that Delhi government has refused to pay 3,500 crore rupees for the arbitral award to Reliance Infra, while the centre has said that it is considering but has not committed to a payout yet. The DMRC says it will try to raise necessary funds from open market and loan from the centre. Meanwhile, the Central Electricity Regulator Commission has ruled in favour of Tata Power for sharing mining profits from Mundra Power Purchase Agreement. This after the company was supplying power to Mundra PPA under emergency measures from May to December of last year. The regulator has ordered Tata Power to share 30% of mining profits and will also share profits via sale at power exchanges. Thousands of employees of 3 state-owned power distribution companies began a 72-hour strike in various parts of Maharashtra today. Employees in areas like Nashik, Nagpur, Aurangabad are protesting against Adani Electricity seeking license to supply power in areas it currently doesn't operate in. Employees claim that privatization in areas where state electricity distributors are successfully operating will dent the financial health of government-owned discoms. Meanwhile, Deputy Chief Minister Devendra Fadnavis has convened a meeting with various employee organizations to look into their demands. Network 18's Uday Timande gets us a ground report from Nagpur.
बिजली विभाग के निजीकरण के खिलाफ महाराष्ट्र के बिजली विभाग के कर्मचारियों ने रात 12 बजे से काम बंद आंदोलन किया है। 12 घंटे चलने वाले इस काम बंद आंदोलन की वजह से कई जगह बिजली निर्माण न होने से बिजली वितरण में समस्या हुई, जिस वजह से किसान, सामान्य नागरिक और उद्योगिक क्षेत्र को बिजली आपूर्ति नहीं हो पाई। 72 घंटे के इस आंदोलन में कई राजनीतिक पार्टियां भी कूद पड़ी है। कर्मचारियों को अपना समर्थन दे इस आंदोलन को राजकीय रंग देने की कोशिश भी की गई। अगर सरकार इनकी मांगों से गंभीरतापूर्वक ना ले तो आगामी 18 जनवरी से पूर्ण काम बंद आंदोलन करने की घोषणा भी इन आंदोलनकारियों ने दी है। अब देखना यह होगा कि सरकार इस निजीकरण के खिलाफ और कर्मचारियों के हित में क्या निर्णय लेती है। वीडियो जर्नलिस्ट प्रशांत मोहिते के साथ उदय तिमांडे, CNBC नेटवर्क 18 नागपुर।
Well, with that, it's time now to slip into a very short break. But coming up on the other side, higher household expenditures, lesser spend on health and more savings. That's the sentiments among consumers as we enter 2023. Exclusive details of the Axis My India's Consumer Sentiment Index for January is up next. Welcome back. You're watching Business 360. Now, as we enter 2023, how is consumer sentiment shaping up in the year ahead? Well, according to a survey by Axis My India, Indians spent more on household expenditures and less on health. The survey also found that Indians have been saving more. Shilpa Rani Beta now joins us with the key trends and the key takeaways. Shilpa, over to you.
Well, higher household expenditures, lesser spend on health and more savings. That's the sentiment among consumers as we enter 2023. Now, this is according to a consumer data intelligence company, Axis My India's Consumer Sentiment Index for January. Now, the Net Consumer Sentiment Index score, which reflects consumer sentiment in the past month of December, has improved over the last month to 8 points, with the score hovering around between 7 to 10 points in the last 6 months. Now, this survey looks at household spends and trends covering media, consumption, entertainment and tourism as well. Now, a sample size of around 10,000 people across India, 70% of who are from rural India and the remaining from urban, and a majority of the respondents are male. Now, the biggest takeaways from the survey is that household expenses in December has gone or remained same for about 91% of those surveyed, and of this, it has increased significantly for about 40%. Why? Largely because of rising inflation, higher health-related spend, and also reduced income. And 86% of those who were surveyed are spending less or more on essentials, while discretionary spending has gone up for just 7%, with 88 spending the same as last month. Now, these numbers are slightly lower than the December index, indicating some improvement in the sentiment, especially compared to the first half of the year, also reflected in the fact that 95% families are now getting out more for short vacations. And as we enter into the new year, financial goals are also taking precedence, especially amidst rising inflation and the pandemic-related uncertainties. Now, 34% are saving for their child's education, 14% for marriage, 8% to buy a house, and also to save for bad times. And looking ahead into 2023, what do consumers want? Well, they want more employment opportunities, better salary hikes, a curb on inflation, and also a better standard of living. Now, this overall, Axis My India says, reflects the sentiment or the current environment, which is of resilience and cautious growth.
Right, Shilpa, thanks a lot for that quick wrap of the highlights and the takeaways from that survey. But joining me now to discuss more about the survey is Pradeep Gupta, CMD, Axis My India. Mr. Gupta, thank you so much for joining us firstly. And the first question, if we look at the overall consumer sentiment index score, there is marginal improvement over December in the month of January, but it is lower than the first half of the last year. Your quick take on the consumer sentiment heading into 2023?
Thank you, Asmit, for having me here. The quick takeaways, I would say, from a future perspective, there is two aspects to our study. One is that what is your current consumption, spendings, the media consumption, the spendings, essential, non-essential household. And what is more important, Silpa has already mentioned, the future outlook. That is more important. When we try and ask, are you planning to invest in the coming year? 16% said yes. 16%, though it may look a very minuscule number, but let me tell you from how to read this data. See, there are about 90 crore people in the country who is 18 and plus age group. 18 and plus age group. So if you dissect further, 19 to 16%, which is 14 crore, which is a too substantial a number, particularly when your investors in a stock market is roughly 12 crore, investors in absolute term, in the absolute numbers. So that incremental of 2 crore is too big a number in that sense. And over and above, when your total income taxpayer in the country is roughly around 6.85 crore, and if you see the people who are ready to invest in future is pretty significant. And now the next question is how and where they want to invest. I think Silpa missed out the data. The most important point is those who want to invest these 16%, if we take this as 100%, out of this, 16% say they want to invest in real estate, 13% say in business, 11% says in insurance, bank deposits 9%, mutual fund 5%, gold 5%, and stock market 4%. This is the overall outlook, I would say, at this point of time. Yeah.
Mr. Pradeep, hi, Shilpa here. I just wanted to go back to touch on the household expenditure bit also. Now, the increase is slightly lower than last month. But is that only because of the health-related expenses going down? Or, I mean, is it fair to say that inflation is still pinching? Yeah, please go ahead.
Two things. One is that household income, you have to see from the other data point, which is the mobility. And particularly when it comes to the December month, the mobility has increased from 5 to 7, which is very significant in that sense, 28% high. So the moment you get out of home, naturally your household expenditure is going to lower. So that is the precisely reason why you can see the dip in it is the same in the household spendings.
Right. And I also wanted to touch upon amongst if we look at the scope of the survey, right, I wanted to understand there are 39% were female. What has been the sentiment amongst women? Are they more optimistic than men are, or is it the other way around? What's the general consumer sentiment if you're looking at women?
Yeah, when it comes to women, it's all about basically two things. One is the household spending and the spendings on essentials.
Right.
So this is where their sentiments drive, and particularly when it comes to the inflation, if at all, and if their earnings or the income is limited and not increasing, then their sentiment get dipped. And over and above, if they have to spend on the health or the medical, the good news in this December month, they have spendings on the medical front has decreased substantially. And income, let me tell you also, we also asked, has your household income increased in last year? Let me tell you the answer. 10% says yes, it has increased significantly, 10%. It has increased marginally, 18%. So the total coming to the plus side, the increased side is 28%, whereas income decreased, 32% is saying income decreased, and about 41% saying the income is same. So I would say 28% in a way in a moderate number as compared to 32% those who are saying their income is decreased. This is what is also driving the sentiment.
Sure.
The income is the key driver apart from the spending.
Sure. Sure. Mr. Gupta, I'll just come in for a final question here. Ashmit again from Delhi studio. The question I want to ask is, there's a very distinct rural bias as far as respondents are concerned. 70% of the respondents were from rural India. I just want to get a sense, would the picture be very different if the ratio changed to say 50-50 and there were more respondents from urban centers, which is where you would imagine there would be more young people with jobs who are willing to save and invest? Would the picture change? Would your numbers tell a different story?
Yes, definitely yes. You are, Asmit, absolutely bang on and right. But when we do this study of all India level, we need to make sure and stratified our sampling to demographically and geographically representative. You are 100% right when you say it. When we try and dissect further, deep dive into the data sets, in the detail, you will find only if you select the urban sentiment, it is going to increase in the ratio of 70% to 30%. Which is urban is 30% in our data and 70% in this. And if you go further to the only data from the female, then you will find the totally different findings altogether. For that, I wish we have at least 1 hour show to detail discussion for this.
You're completely right on that, Mr. Gupta. Numbers on this scale will definitely merit a longer conversation, and we hope to connect with you again to take this conversation forward. But that's unfortunately all the time that we have on this Business 360. It's a wrap on this edition. Thank you so much for watching. Stay tuned to CNBC-TV18. The news and updates will continue on the other side.